You're listening to A Deeper Dive, a part of the Winsight Podcast Network.
What is the future of restaurant loyalty programs? Hello, this is Jonathan Mays, Editor-in-Chief of Restaurant Business, and in this week's episode of A Deeper Dive, I speak with Stephanie Meltzer-Paul, Executive Vice President of Global Loyalty for MasterCard, to talk about loyalty programs and best practices for them. I asked Stephanie to be on the podcast because a ton of restaurants right now of all kinds are pushing loyalty programs, or they're changing loyalty programs, or they're upgrading or downgrading them. And I wanted to know why, whether these are as vital as everybody says, and what companies should and should not do about their loyalty programs. Stephanie has some fascinating comments about all of this. In particular, she has suggestions for companies that have to make changes to their programs as they mature, and why it is necessary sometimes to accept angry customers. We also talk about why it took restaurants so damn long to get into this business. And we talked about best practices for full-service restaurants and what kinds of loyalty program trends are coming in the next few years. It's all about restaurant loyalty on A Deeper Dive, so please have a listen. Okay, I am here with Stephanie Meltzer-Paul. Stephanie, welcome to the podcast.
Thank you so much for having me.
All right, so first off, tell us a little bit about yourself and who you're with.
Yeah, so I'm the Executive Vice President of Global Loyalty for MasterCard. We're we believe one of the world's largest loyalty providers. So we run, manage, do strategy, and bring to life loyalty capabilities for brands worldwide, everything from banks to some of the largest consumer brands, including a lot of restaurant organizations.
Mm-hmm. And probably business pretty good right now, huh?
It is. There's a lot of demand for loyalty, both in terms of organizations wanting to get into loyalty for the first time, but also a lot of brands that have been loyalty for a while are thinking about sort of a refresh of their strategy, which is also really important because as your business is changing, your loyalty strategy needs to change. So a lot of organizations are reaching out, asking for strategy, sort of consulting, assessments of their program, looking for sort of ideation on how to make them stronger, even just help in terms of analysis to understand the incrementality that their programs are bringing.
Mm-hmm. Why are loyalty programs so important right now? Why are we seeing so much of this investment? Because like in the restaurant business, it's like nothing else. I mean, like literally everybody is working on it. If they're not, they're probably dealing with other issues at the moment.
Yeah, I mean, loyalty programs have really trickled down into the restaurant industry pretty much into the last, 5 years especially. There were some big outliers, you think your Starbucks, your Dunkins who were in loyalty a bit earlier, but really in the last 5 years, it's exploded in the restaurant space. And one reason for that is just, everything moving digital. Has really helped. So if you think about sort of mobile ordering as a trend, that really being tied to loyalty strategy. But two, I think restaurants realized restaurants were still the segment that was very hard to get consumer data. For QSR, still a lot of it is in cash here in the US, more than I think most people would think. But they didn't have access to data, unlike with retailers where you're going on and you're ordering, you're getting an email address, right? You're getting that profile information. It's very hard to do in the restaurant industry. No one is really thinking about giving you their email address when they're checking out, whether that's fast casual, formal sit down, or in a QSR. They just kind of want to get on their way. Mm-hmm. So signing up for loyalty programs was a way to really identify that data, but then that allowed restaurants to do that level of personalization, to do those sort of offers, to drive that level of stickiness. And many organizations, restaurants were getting into loyalty initially, and then just doing a little bit and seeing that it's working. And then it's sort of, okay, it's sort of one copies the other, and everyone realized, wow, if my competition is putting a lot of dollars into loyalty, there must be a reason and it must be working. And also loyalty was coming up on many in earnings calls for most restaurant companies as what was fueling a big part of their growth. So again, it's sort of that ripple effect across the industry. From the consumer perspective, actually the actual restaurant consumer, loyalty programs were a way to offset the rising cost of actually the goods, right? Prices have been going up in the last few years, and loyalty programs were a way to really offset that, to feel like they were getting a certain level of value. So it's you're seeing it on both sides.
Yeah, I mean the restaurant industry is very slow to really adopt loyalty of any real decent sort, and it kind of really took Starbucks and a few companies like that to sort of break that long reluctance to invest in this sort of thing. And then I guess it took the pandemic and then a run up of inflation to really put this thing into sort of overdrive.
Yeah, and we, at MasterCard, and we talk about a lot of this with the brands that come to us, in that, loyalty is not necessarily always a program. Loyalty is an outcome, and it's an outcome of actually a strategy. And sometimes that takes its form from a very formal program in terms of whether it's points or cash back or subscription. But other times it just could be a level of exclusivity. It can even just be, access to certain benefits within a digital channel, so to speak. And you can win in that way as well. You can still get access to the information. You can still run a certain level of personalization. You can still do a certain level of discounting. You don't always need a formal loyalty program with points. One, because the level of investment in that is higher. There is a significant cost to that, as well as you need the frequency. So in the restaurant space, if you are a restaurant brand, think, your Starbucks, your Dunkin's, your McDonald's, right? A lot of your QSRs that have high frequency, a traditional points program really makes a lot of sense, because you're going to rack up a lot of points easily. And then you have enough frequency around the redemption. But when you get sometimes more into maybe fast casual or definitely into sit-down restaurants, a traditional points program is much harder, because you just don't have the same level of frequency and scale. So you might want to think about, other things. We're not saying it can't work. We've actually seen that it does work as we work with some customers who are in the sit-down space. But you have to really sort of know your audience and understand your frequency and who your program is for. Your program cannot be for everybody. And if we ever, talk to brands, we say, you do not design your program for every one of your customers. You're designing your program for the customers that are going to visit you in a certain amount of scale, and that's who's going to get the most benefit out of it. And your goal is to get those who are less frequent to sort of arch over into that higher frequency.
So how do you do this in the full service space? Let's talk about that for a second, because you're right. I think it's, when I think about it in the fast food realm with Starbucks and now McDonald's and Panera Bread, and they've got these point based, and, you you collect points, earn rewards, da, da, da. But, full service is really tough. A little bit more complicated, because to your point, I only go, as much as I love Applebee's, I only go so many times.
Correct. Sometimes you can start as simple in terms of testing, in terms of, hey, sign up for program or program like, right? And automatically you're always going to get, let's say, buy one, get one free appetizers, 50% off, things like that. Sort of like these always on sort of, discounts that you can sort of measure the frequency against. And then from that, you can sort of watch that behavior and see what sort of changes are happening. And then you can start to add even richer benefits on top for those who come more frequently. But in a lot of cases, it could also maybe be sort of surprise and delight. When you think about loyalty strategy, it doesn't always have to be published benefits. You can actually have a lot of great benefits that are behind the scenes, that you're sending to a select group of your customers so they feel really special. You can sometimes create an allure, right? You used it, you can take any of your brands and say, maybe there's like a secret card out there, a secret membership card. It's like, how do I get that? There's a lot of different tactics, I think, a sit-down restaurant can use as a way to sort of track the behavior of their customers. But at the end of the day, they have to listen, right? Is there a demand there? And there's so much you can do nowadays in terms of social listening and feedback digitally from your customer base that are they asking for a formal program? What are the type of benefits they're asking for? And really use that research to put something into test mode. And we always recommend that. We work with a lot of brands. We've worked, with restaurant brands, and sometimes they can be in test mode with loyalty programs for as much of a year in a specific market to sort of work out the kinks and see, does this really work before we actually want to roll it out nationwide?
Mm-hmm. Mm-hmm. So what is there something that the restaurant industry can learn from, say, airlines, for instance? I mean, we hear a little bit of talk now as companies start thinking about their loyalty programs about sort of trying to adapt their strategies to maybe mimic some of these industries where these programs have been in place and are a lot more sophisticated. And airlines is always one of the first ones, and I guess I think about myself as a Delta frequent flyer that, I mean, some of the stupid things that people do to earn miles or get points or to get status. So,
Yeah.
it's not as much free. Well, it is kind of free stuff, but as much as anything, to be honest.
Yeah. I think the restaurant industry has a benefit in terms of what they can give out, and they don't have quite the same challenge that a hotel and an airline does. And that's because a hotel and an airline does not have an infinite number of rooms and seats to give away, right? They don't have unlimited capacity for lounges. So, by necessity, the airlines and the hotel programs have had to tweak their programs over time just because of that, right? They have maybe too many elite members for the amount of capacity of benefits. You're not really going to see that in a restaurant company because they're not running out of coffee, right? They're not running out of burgers, right? So if that is what your redemption is, now you still have to watch the economics of it. And all organizations, and you're even seeing this now in the restaurant space, they're having to update their programs every few years because initially, when the restaurant organizations got into loyalty, they built the programs for everyone. Hey, I'm starting out. I want as many people to join. And then you reach an inflection point that if your program is designed for everyone, it can actually start to become less profitable. And so now you need to tweak it and make it more designed for your most profitable members. And you want to give the best benefits to those who are the most frequent. And that can create backlash. And that has happened a lot for a lot of brands. But, you'll win in the end in the long game. You sort of need to separate out the noise. Consumers don't like change. Across every industry that has loyalty, nobody likes change. Because the consumers that are getting the best benefit out of an existing program, when it goes and changes, they automatically think that it's going to be worse for them. So there needs to be a certain level of sort of testing. The way you roll out changes to a program is also really important, but you have to stay true to the economics. For food establishments, the cost of goods has gone way up, right? Especially in certain sectors, right? Like chicken, right? A few years back, right? The cost of chicken was up. I mean, I think, double-digit percentages, some crazy amount, like 50%, I think at one point I read. If you have a loyalty program that is giving away free chicken, you're going to have to suddenly change the value of your points to make that work, right? As an example, even your couponing strategy outside of a formal program has to change. So I think consumers are getting more used to the fact that loyalty programs are constantly changing and evolving. But I think what's happening is consumers realize they're really only going to stay engaged with those that they're frequenting a lot. Otherwise, they just sort of sign up to maybe get a short-term discount and then you don't see them again. Which is why I say, a lot that the number of members you have in your program isn't really a great metric because a lot of people sign up to sort of initially. It's really what's happening in that sort of second, third, sort of fourth level of engagement with a program that really shows the health of it.
Yeah. I always feel like it's the active users are a far better metric, at least from my perspective, when I'm looking at companies and their loyalty programs, because you can't, I mean, to your point, I mean, a lot of companies will give you an incentive to sign up for it. I mean, in fact, to be honest, I mean, the incentives to get people to sign up for loyalty programs right now are absolutely through the roof. And companies are almost, that's so much of the value offers in today's, particularly in the fast foods business, which is primarily what I cover.
Yeah.
So much.
And in some cases that's expected, right?
Mm-hmm. Sure.
If your brand, and for every 100 new members you sign up, maybe, if 20% of them end up giving, are engaged with the program, that doesn't necessarily mean that they're not engaged with the brand. It means they're not engaged with the formal program. But why it's really important for restaurant brands is they can send email, they can send text messages. And that customer, by the sheer nature of now having their contact information, you can drive marketing behavior. But they might not be someone who actually cares about the formal program. And that's really where understanding and having that 360 view of a customer is. Because if you're only looking at the benefit of your loyalty program within the transaction of the loyalty program, you do need to be looking at what is actually happening to those people, and can you track their behavior outside of your program? Because I've seen analysis in my time that in a lot of cases, even those who are engaged with the loyalty program in some QSRs, they might only actually scan their loyalty ID 50% of the time if they're lucky. A lot of times they forget, no one asks them, they forget to take out their phone. They think it's going to take too long. So, they're in the program and they're getting a lot of marketing and it's driving engagement, but it might not be actually attributed to the actual loyalty program. This is where retailers have it a little bit easier, because if you're actually logged in, you're automatically going to earn those points and get that engagement, versus in a restaurant space where it's still all sort of face-to-face and in person. You still have this barrier around, self-selecting, I'm in the program.
Mm-hmm. So that seems like that the biggest, or like one important point then is to make sure that you're training your staff, your people, to make sure that they're scanning these loyalty, that they are doing what they're supposed to do. Because it's kind of pointless doing it if you're not going to get the information. I mean, the big reason why we do loyalty programs in the first place is to get that customer information and continue.
Yeah, I mean, I've worked on a lot of restaurant brands, and the brands that have trained their staff to ask every time, hey, are you a member of our program? That make it easy, maybe just put your phone number into the keypad, whatever it is, that really makes a very big difference. However, in a restaurant space, especially in QSR, where speed wins out, right? You have to measure that trade-off between, am I slowing down my line? Am I slowing down my drive-through to do that? Or am I going to ask? That's where I think technology is really coming into play, right? As someone pulls up to a drive-through, can you recognize via their phone who they are? And then automatically, if they have location services on, right, on a digital menu board, it's like, welcome back, Stephanie. That's really, I think, the type of brands that are really going to separate themselves from the others. But I've seen it all work, right? The simple sort of human asking can work. Some brands are actually still, crazy or not, still using like punch cards, right? And in some cases, they'll work for a period of time. I think every brand needs to sort of figure out the strategy that's going to work for them uniquely versus perhaps copying someone else. And I know it's sometimes easy to do because you're looking at your competition, but you got to look at your own data first and foremost.
Mm-hmm. So, like, do you really think these are vital to have for a restaurant company right now?
I wouldn't say the word is vital. What I would say is the word is it could be very important and make a difference. But again, I think it depends on your brand. I think it depends on your frequency. I think it depends on your footprint. What I will say is every brand needs some loyalty strategy. Not every brand, I think, needs a formal loyalty program. And I think when we hear the word loyalty, we jump to sort of points and miles and stars and all those things. And that's a big part of the industry. But you can drive loyalty in a variety of ways, including making sure you have a really good digital strategy that is driving repeat behavior. Personalization, right, drives repeat behavior, part of your loyalty strategy. We know this well here at MasterCard, via our acquisition of Dynamic Yield, which is a leader in personalization. We know reward programs well, right? We have Session M. So it's, we see it all. But again, our consulting practice, our consumer engagement consulting practice works with a brand to say, what is the right strategy for you?
Mm-hmm. Yeah. Yeah. I mean, I guess that makes sense. So what do you think in terms of, like, if we look down into the future, do you see any sort of trends in loyalty that we think are going to come into the restaurant space at all?
I think trends are, I still think formal programs will be around. But I think what's going to happen is you're going to be moving away perhaps from having to need almost like this sort of formal sign up. I think it's almost sort of organically going to happen behind the scenes. Mm-hmm. And especially as more and more sort of moves digital, and consumers are going to find, I think, a lot more sort of surprise and delight. You're eligible for sort of this benefit type unlock. I also think subscription programs will continue to sort of come more and more. They won't work for everyone, right? You don't want to be discounting, your sort of core offering. You have to be careful, are you discounting, your high or your low margin items? But I actually think subscriptions could really work out for the better if you're a brand that has a certain amount of frequency. And it's the type of thing that actually can be tested. And it's a little bit easier to measure the economics. But, the value has to be there for the consumer because it's paid. So there's a lot of considerations in that, but we're seeing a lot more demand around actual paid programs when it comes to loyalty in the restaurant space.
Yeah. Yeah. Restaurants have been kind of a little bit tepid about moving into subscription programs. We've seen them for actually quite a long time now. We've seen experimentation with them for years with coffee programs and things of that nature. But you'd think that by 2023, we have the technology and the capability to be able to do this, but it's still a little bit, they're a bit cautious on that.
Yeah. And I think, I also think perhaps maybe what we've seen in the past is some of the subscription programming has been around perhaps not the right product, right, in the product mix. Also, I think the devil is in the details, in the fine print. Right. If you're allowing people perhaps to have an unlimited amount over a certain period of time, right, you don't have the proper caps, suddenly the cost can run away from you with a subscription program. So this is where sort of that testing and finding the sweet spot is necessary. And also, if it doesn't work, folding a subscription program is a bit harder, right? You now have to give people money back versus in a free program, you can say, hey, you have so much time to go use your points and then, we're done. So there's a lot of considerations before getting into it. Right.
I did want to quickly before we end it is go back to when you talked about, you said that when we talked about how companies will change their loyalty program after a time because it's no longer as profitable, which makes some sense. And we have had some really high profile situations in the restaurant space, actually outside of the restaurant space, the aforementioned Delta being one of them, in which companies change their loyalty programs and customers go berserk. And that happened with Dunkin' in particular. It seems like from my perspective, that seems like it's a risk, but you're saying, it seems like you're almost saying in those situations that it's something that you have to do in something like that.
Yeah. I mean, all brands at a certain point are going to have to make changes because the business and their economics are changing. And they're not going to be able to service either. What happens is if you're building a program for everyone, you're then not serving your best customers best. So there is a way, I think, to roll it out. I would say more often than not. And I know in a situation, you said like with Delta, they're saying, hey, we're gonna roll it out more slowly. But more often than not, if you look at the trajectory going back of even in the QSR space, brands that have had loyalty programs for many years and have made changes over time, the numbers in those programs continue to just get stronger. But most times when they made a change, there was some sort of consumer blowback around it and unhappiness. But still, the programs continue to grow and get bigger. That's because the research, the background has been put into it. And while there's an initial shock, when you actually get into it and start using it, the program is actually very effective for the group of customers that it was actually designed for. And the brands that do their homework and that economic and their research will win out. That's not to say that every brand doesn't have to always make some sort of tweaks, right? When you roll out a program, not everything goes according to design. But if you build it in a way that you can make those tweaks, which is why when brands work with us, we say that's the benefit of working with us, is that we have platforms that if something's not working, we can change. We can add tiers. We can change point, earn and burn. It's important to have that flexibility, but those things can be done in phases, and not necessarily be sticker shock for consumers. This is a long game, right? It's a long game, and we explain that to brands. Your program won't be, immediately sort of profitable, overnight, and customers, overnight, they might sound that maybe they're unhappy about something, but this is a long game to get right, as with any part of your brand strategy.
Mm-hmm. Stephanie, this was fantastic. Really appreciate you joining me on the podcast.
Great. Thank you so much for having me.
And that should do it for this week's episode of A Deeper Dive, which was edited, as always, by Kimberly Spoons Kazmarek. Artwork by Nico Hines. You may find this and other episodes of the podcast on our website at www.restaurantbusinessonline.com/article/deeper-dive. And you may subscribe on Apple Podcasts or Spotify. I am Jonathan Mays, your host, podcast producer, and the editor-in-chief of Restaurant Business. Thank you for listening.